Welcome back. This is Chili Davis, and I'm back to do another video. I want to welcome back my subscribers and welcome to my new viewers. Thank you for taking the time to stop by my channel. Tonight's video, we're going to talk about credit very quickly, and I'm going to go through some ideals about what a 750 credit score means, and we're going to get right into it. So I'm on creditkarma.com. And a lot of people think, hey, if I got a 750 credit score, I can get approved for, a personal loan, a home loan or car loan. But there's a lot of characteristics that must be met to get that. All right. So in a nutshell, a very good or excellent credit score opens up some best offers and rates on the market, while lenders look at a variety of factors when considering a credit or loan application. Excellent credit scores generally means you have a good chance of approval for the loan and other credit products with good terms. So what does that mean? When they say good terms, that means you can get 5-year car loan with low interest rates anywhere from 0 to 5%. That's good credit. A 750 credit score is often considered very good or even excellent. A very good or excellent credit score can mean you're more likely to be approved to get a mortgage, auto loan, credit cards, and reward perks. So this part is true, but it is still about the contents of the credit score. So you could have what they call a thin credit score. That means that you have one credit card and you keep it paid down to, nearly $0. You pay it off every month. So that could be a 750 credit score. A credit score can be an important factor when you apply for credit, but you actually have multiple credit scores from different sources, each one drawing on different data from various credit reports with major consumer credit bureaus, such as Equifax, Experian, and Transunion. So why do I talk about this? The reason why is because everybody wants to say, just show me the money. If I have a 750 FICO score, I can get the car, or I can get the home, or I can start the business of my dreams. Well, I've been doing credit since 2016, and it's a lot harder than that. Building credit is a journey. It is not a race. I don't care how many YouTube videos you watch, it will not happen overnight, okay? And if it does, then, someone co-signed for your loan. So anyway, the reason why I wanted to talk about this tonight was because someone was asking me, if I have a 750 FICO score, a FICO 8 score, can I get the loan? I said, it all depends on the institution. So what is FICO? What does FICO score mean? It's the most widely FICO scores is used by 90% of the top lenders and make decision extending credit at what terms and rates, based on a complex scientific algorithmic assessment of information in your report. And it is made up of payment history, amounts owed, length of history, new credit, and credit mix. Now, unfortunately, this length of history has to at least be 2 years for you to even have a 700 credit score. You're not going to have a 700 credit score with a short, well, even if you have a 700, but you have a short length of history, more than likely you'll get denied for a lot of products. Lenders in general like to see this length of history be a minimum, whether it be a car loan or credit card or a small personal loan. They want to at least see 2 years of payments. And the number one factor here is payment history. If you miss one payment, then your score drops by like at minimum 50 points. And then the final factor is this amounts owed. So the amounts owed is, let's say, for example, you have a credit card worth $10,000. If you have $9,000 on the credit card, then you will lose all the 240 points for this particular part of the score. At 30%, so that'd be 3,000 out of $10,000, you would be in range to get 200 to 240 points. But you want to always keep that balance on that credit card as low as possible. So if you have a $10,000 credit card, you want to keep it down to less than 1,000. And if you have $1,000 credit card, you want to keep it less than 100 on the balance. Okay. And again, they show these 5 factors, but I just touched on the 3 that really matter, which is number 1, payment history. Number 2 is length of history, because that by history is the only way the lender can trust you. In fact, in order to score the peak score of 850, in general, you need at least 10 years history for that. But we're just talking about a 750. Okay. And then the last score that they use anytime you get your credit pull is how much of your available credit are you using. So that means if you have, 3 credit cards, each having $10,000 on, so that's $30,000 worth of credit. Are you using more than $5,000 on each of those cards? They want to know that. They want to make sure that you're not maxed out on one of your credit cards. That means if you're maxed out on any of your credit card, it means that you cannot manage your budget. Okay. So I say all that to say, if you want to get a really nice loan with good terms, because technically everybody is approved. Everybody's approved for a car loan. Everybody's approved for a loan. The issue is at what rate and what terms. So I can give you a loan at 50% interest. Everybody qualifies for that. But most people do not qualify for a loan with 1%, 2%. So that is the difference. So you have all that bandwidth from 1% all the way up to 30%. If you have 30% interest on any product, a car loan, personal loan, or credit card, that is the horrible most term. So everybody's qualified, but it's the terms of the deal. Okay. So you want to keep this FICO score high, and you want to work on all 3 of them. So you don't just want to have a 750 FICO score. You want to go as high as you can go. The FICO score in your credit profile is unique to you, and it evolves over time. So the longer you have credit, the more it can go up. If your credit is trending down, in fact, there's a FICO score out now called the FICO 10T. That means FICO version 10, T mean trending. If your last 24 months, your debt is pointed in the upward direction, that means your debt is creeped upwards in the last 24 months, the banks and other lenders will deny you. So you want your debt to be going down. So in case you need to go out and get a loan, you want your last 24 months for your loan to be going down. Now, I mentioned something there, which is FICO 10, FICO 10T, and be specific. But a lot of people don't realize there is actually up to 30-something FICO scores. So let me just show you, there's 2 FICO scores that a lot of people think, they base all their credit decisions on FICO 8, but there's slightly a difference. FICO 8 is basically a credit score that came out about 2008 after the housing crash of 2008. I know a lot of people aren't that young, but basically they had to rewrite part of the FICO score because so many people had lost homes and cars and etc. They had to make a few exceptions to it. So after 2008, they didn't completely write it. They just added some things and took away some items in order to allow the credit scores to be a little bit higher to jumpstart the economy. Now, the FICO 5 was the previous version, and FICO 5 is sometimes used, in most cases, is used for for a mortgage loan. But at other institutions, depending on the size of the loan, you will still be marked under the FICO 5 score. Okay, so it says borrowers must have just 1 score. Each of us probably have dozens or hundred credit scores, depending on which rating company that the lender chooses. Most lenders look at the FICO Fair Isaac Corporation score, but there are multiple FICO scores for each borrower. FICO 8 is most commonly, especially with credit card companies, but FICO 5 is popular with auto lenders and mortgage providers. Now, I talked about in most cases, FICO 5 is mortgages and auto lenders. But if you go get a loan, let's say most credit cards are $10,000 and some of them are $15,000 and so on and so forth. But most credit cards are what FICO 8 is looking for, right? So they're under 15,000. If you go get a personal loan of 25,000 or more, they start look at FICO 5. Why? Because FICO 5, what it does is judges whether you can handle the financial capacity of an auto loan. That's anywhere from $25,000 to $50,000. And then the mortgage provider loans, they're anywhere from, $250,000 to $300,000. So some banks, whenever you need a loan, they just pull FICO 5. They don't even look at FICO 8. But most commonly on the web, on YouTube, people think, oh, they just use FICO 8. That is not true. All right, so here's the takeaway. FICO 5 is one alternative to FICO 8 that's prevalent in auto lending and mortgages. FICO 8 was introduced in 2009, the 8th version of FICO credit score. Notice it was introduced in 2009. This is after the recovery. Now, I know a lot of people aren't young enough to remember 2008 and 9, but it basically, the housing market crashed in 2007 and 8. And 2009, a lot of people were still unemployed. So the banks had to adjust their algorithm. All right, so money lenders rely on the industry-specific FICO rather than a brace version. Okay. Only one reason why mortgage providers, especially a bank, will rely on FICO 5 or FICO 4 instead is the newer FICO 9 and the FICO 10 suite is the earlier versions, less forgiving on unpaid collections and especially medical accounts. Now, remember, I told you they make adjustments to it depending on the current market. Like I said, they made adjustments for the FICO 8. So this is on Investopedia. If you want more information about the difference between FICO 5 and FICO 8, you can read on this. But when I'm teaching someone about credit, I generally teach them about all the FICO scores because I may go to one institution, they may use FICO 8. I'll go to another institution where they'll use FICO 5. And neither one, you don't know previous or not if they're going to give you the best credit, give you the best rate, interest rate, that is. Okay. So I'm going to go to the next page, which shows you here the various type of FICO scores. So notice here there's FICO 9 under Experian, FICO 8 under Experian, FICO 9 under Equifax, and FICO 9 under Transunion, so on and so forth. And you have an auto score for each bureau, 3 different ones, FICO 4 for Transunion, FICO 5 auto score for Equifax, and FICO 9 for credit card lending decisions. And then lastly, FICO 2 for mortgage score. So this is, again, when I'm dealing with a client and I'm asking them about their credit, I have to know because I'm matching up that particular client with a lending product. So depending on that bank they're using, if they're going to get a business loan anywhere from $100,000 to $200,000, they may need to have a clean FICO 2 score, a strong FICO 2 score, anywhere from a 720 to 750. And same on so forth. Depending on the institution, they may need to have a strong FICO 5 credit score or a FICO 4 credit score under Transunion. So this is why there's no simple answer when you're looking to help someone get approved for a loan, whether it's a car loan, personal loan, credit card, or even a home, or even a $100,000 or $200,000 business loan. In fact, business loans go anywhere from up to $300,000. In some cases, if you're going through SBA, up to $1 million. Okay. So when a new FICO score version like FICO 10, it's the latest, and then earlier, I mentioned FICO T is developed, it's released to the market, but ultimately the credit card company, the bank, the credit union, ultimately they decide which credit score, FICO score they're going to use. So they don't have to use FICO 10 just because it's 2021. They could still use FICO 5 or use FICO 8. They ultimately, the lender decides which version of FICO they use, okay? So a lot of times people think, well, if my friend went to Navy Federal to get a loan, then they approve them based on TransUnion. It does not mean that when you walk into Navy Federal that they're going to use FICO 8 under TransUnion. It's just not always the same. Okay, so you just have to know that. The best thing I can tell you if you want to get a good credit score is work on these three things, which is, again, amounts owed, payment history, and length of payments. A lot of times people are trying to get a $50,000 loan when they're only ready for a $25,000 loan. This is how I can make analysis on where a person is at by their credit profile. And I'm looking at these 5 factors. New credit, did they just open a credit card last week or last month? Credit mix, if they only have one type of credit, a car loan, they need 3 types. They need a credit card, they need an installment loan, and they need maybe a short-term loan. So they need the short-term loan, which could be 9 months, and then they need the long-term loan, which could be 24 months, and then they need a credit card, and then they at least need a collateral loan, which could be a car loan or a home loan. So I do a full analysis on people's credit profile when I try to match them with certain, I guess, opportunities for funding. That's why I named this video is funding approved with 750. Okay. Now, a place I go just to, get some quick ideas. There's a website here called Credit Boards, and it's been around since 2003. And you can post any question you'd like. So medical bill collections, bankruptcy, foreclosure, check systems, debt consolidation, military credit, all those topics are here. And I also, okay, so they do mortgages and business credit. I've used this website a lot for business credit. I mean, they have information as far back as 2003, but they also have evolving information from 2021. As you can see, they have business credit. Okay, this is 2000. We're talking about net 30 vendors and that type of thing. A good mixture of credit lines, okay. And it's been viewed 2.6 thousand times. So again, if I want to know about a topic and I don't have time, this is how I do my own research, is I basically visit a site like creditboards.com. The other site I go to is My FICO. My FICO has several forums where you can ask questions as well. I'd like to apply for Navy Federal, but has anyone applied with a 620 credit score and been approved? And then they list the type of credit cards they have under it. And then you have people saying stuff like, most definitely I was approved, but that can be totally false and misleading. The reason why, again, is because each credit profile is uniquely different, okay? So person A may go to bank A, B, and C for a credit card, but person B might have to go to bank D, C, E, and F to get a proof for a credit card or car loan, okay? But the best thing you can do is try to get the best credit score before you go for that loan or credit card or whatever product that you need, okay? And just for kicks, this is just a website that I like to use, is credit.com. It's totally free. You can log in here and you can see that you have all these grades. So you have A+ for credit history, A+ for credit age, and A+ for account mix. So again, this site is totally free. If you want to sign up, you'll get this is not the FICO score. This is an educational score, what they call a Vantage score. but you get the full criteria. You get debt utilization, just like I talked about earlier, amounts owed, and new credit, what they call credit inquiries. And the last site that I like is called Credit Scorecard. Credit Scorecard is a free product by Discover. Anyone can sign up. And again, they provide a free FICO 8 Experian credit score. And this is totally free. Like I said, this is provided by Discover. You do not have to have a Discover card to open this account to get your free FICO 8 score from Experian. This is totally free. They alert you when you get a new credit card or new car loan or new account pops up on your credit profile. So again, I want to just go back to the simple question of what does a 750 credit score mean? A good, solid 750 credit score means that you can get approved in loans in terms of anywhere from $100,000 up to $200,000. $100,000 up to $200,000. Okay, so that is the value of having the 750 credit score. Let's see, I might have that information. Okay, I can't find the video right now, but you can get approved anywhere from, like I said, 100,000 up to 300,000 with a 750 FICO score. All you have to do is show the lender that you have proven revenue to repay the loan. And, you know, again, in most cases, you need at least a minimum of 720 FICO score. So the terms are, the interest rate is determined on how good your score is and how much you can afford to pay back. So essentially, if you have a $300,000 loan, then more than likely you're gonna have to show revenue of $300,000 in your business. But it's quite possible. You know, some people I've seen get $100,000 loan with just a strong income and a good FICO score. So this was just a brief video about what does a 750 credit score mean. I'll put a few links at the bottom of the video, but I just wanted to share with you the factors in creating a good credit score right here, such as amount owed and payment history. And then also I wanted to talk about the 39 types of FICO scores there is. And here you can see Equifax, Experian, and Transunion. And you can see that there's auto lending, there's mortgage lending, and then there's new release versions here, like FICO 10T. And then you have all four